Yeah, morning trades. Obviously, we've got a BDI on what's been happening in the Ashes cricket. Secondly, a fairly volatile session coming through in European trade and into US trade. A lot of that can be explained by what we've seen in fixed income markets. There's been some big moves playing through, and obviously the data flow has been front and centre there. German factory orders were up 6.4%. That's been one focal point. UK rates have sold off pretty hard. Actually, terminal pricing at one stage for next year for the Bank of England pricing got up to 657 for the March contract, and certainly going to US data flow. Obviously, all eyes on that ADP number there in terms of the extent of the beat that we saw at 497,000. Far hotter than what I was looking for, and certainly the market's extrapolating that for what it can mean for the non-farm payrolls number. Obviously, this has been a very poor predictor, but the extent of the beat there was something everyone's looking at. That was also then backed up by the S&P Global Composite number at 53.2 was hotter. We saw fairly stable claims coming through, and the continued claims actually fell a little bit. And then we actually saw them backed up with a strong ISM service number at 53.9, with new order subcomponent 55.5. Now the wash up was we did see a spike up in 2-year treasuries. We saw yields trade up to 5.11. We saw German bunds at one side closing about 15 basis points higher. And in 10s, we got up to about 4.08. And obviously real rates are having a big move as well. I think real rates on 5s got up to 225, up 20 basis points on the day. At that point, when we were seeing that, we saw European markets closing on their lows. The CAC closed down 3.1% in the cash market there, which is about a 4.1 Z-score move. Now, as the session wore on, we did see some buyers coming through in the bond market. We saw yields moving progressively lower throughout the session. And that saw equity markets in the US feasting on that and picking up quite nicely from the lows. I think S&P futures at one stage were down 0.3%. But you can see the cash moves. Now, what we've actually seen in FX markets is a bit of unwinding of the carry trade. Certainly seen that in MEX, some of the LATAM currencies. The yen has found some good buyers, as obviously they've been the preeminent funding currency, and you can see the moves across there. We saw gold trading down to 1902, but a bit of buying coming through as yields have moved a little bit lower. Now we're watching Asia today, obviously non-farm payrolls ahead of us, but Asia looks like it's going to get off on a softer start here.